Hello, I hope you can hear me. You're welcome again. Now we are coming to trade and risk management. We have known how to trade, what to do when we see our signal, all of those things. How do we manage the trade? Okay, because that is one major thing that can make us to be very profitable and consistently. Okay, now we'll be looking at the first part, trade management. That's what we'll be looking in this particular video. Then the second video will now be about risk management. Coming to trade management, there are some simple rules that we just have to take note of. Trade, number one, trade with the predominant trend. You have heard that the trend is your friend. So when price is selling, you are also selling. So if you have selling signal when price is selling and you sold with it, you have high probability of your trade playing out. All right, now trade with the predominant trend. Number two, if major trend is uptrend trading opportunities we give high probability. That's what I've mentioned there. Like probably you see trade is uptrend, we have flip there. Then when flip happens, we have our signal there. When we take this trade, there's high probability that this trade will play out. We have another flip, probably a signal there. We enter a signal. The probability that this trade is going to play out is very more than when price is now uptrend. While flip, maybe there's no entry there, then price is making this type of pullback, whereby there's now flip in counter trend, all those things, and the main trend flip has not been activated. This is the main trend flip, while this particular one is the counter trend or minor pullback. So going into minor pullback entry may not be recommended, but if your signal is very okay, you can also take it. So it's just that if you want high probability, moving with the trend is the best thing to do. Now, as major trend is uptrend, minor pullbacks can be traded in downtrend until the major trend zone is reached. Okay, now this thing also same applies for major downtrend or minor pullback. Let's go to the diagram illustration to get it. This is what I mean. This is price making impulsive move, pullback, impulsive move. During that process, our resistance now has failed, turned to supply. Then, when that happened, then price is supposed to come down and come and give us this signal. Okay, so price is coming down, but while price is coming down, price is making minor pullback. You can see this minor pullback. Then price went back to that flip where the minor support has now turned to what? Resistance. Price came to the resistance, give us our entry signal. When we enter this trade, we are going to sell this trade until we have come to this major trend from the left hand side, this major trend point. Now probably because when price now get to this major trend flip, resistance to support to resistance flip, and give us a signal here. When we now buy here with the trend, you can see that if our trade here has not already hit profit before price coming to this particular flip zone of the major trend, and we buy here, this buy is going to cancel out any trade we have in this place. Hope you understand it. This major trend buy is going to cancel any trading decision that is going to be made in this place. So we have to take note of that, so that our trade will not be hitting stop loss unnecessarily. Okay, now that is for resistance turning to support or support turn to resistance. Then if price present two entries, for example, demand and supply, and sometimes with confirmation entry, when price is making this pullback, price is making positive move, price gave us a pullback there and then making positive move, but before he made that positive move, he left behind what? This is what? A demand zone. Okay, now when price is trying to come back, probably to come back to this demand zone, then while price is trying to make that move, price is giving us minor pullback, where the minor pullback here is what? Give us is a minor support. Then in that minor support, we can see price tap into the minor support, give us our confirmation entry. the thing now is this: if after giving us the confirmation entry for the minor pullback, price also tap into it and continue selling, we are going to sell until we get to what? To this major uptrend demand zone. So we are going to sell minor until the major pullback, until the major zone. Hope you understand it. So because when price come to this major zone, it can give us our confirmation entry too. That is what I'm talking about. While there are some times after price has formed, all this our trading here, and price did not activate, price may not activate this minor support, minor supply, sorry. Price may not activate this minor supply. It will just give the signal there, then it will come into this our major trend supply zone, sorry, demand zone, thereby giving us our signal. When we take our signal from here, from this major supply zone, major demand zone, we'll take our signal for buy. If our entry now meets, if our signal as we are trading it meet this particular signal, it is going to fail it. It's going to go through it. Why? Because we are moving with the major trend. That is why in that first example, he said, always trade with the trend. All right? That is how you decide, because the market is very manipulative. It cannot give you everything on a platter of gold. All right? Now, the last part, I'm going to show some example. But before then, when a signal is not tapped and another signal is tapped, cancel the first signal. Then, if price come back to that first signal, use double confirmation to make a trade. This is what I'm talking about. Price is making impulsive, pullback, impulsive, canceling this resistance, turning the resistance to support. Price came back, give us our signal here, but it did not tap on it. It just went up again. Take out this resistance, turn it to support. Price came back. That's number 2. Giving us our signal here. It went up. It did not tap on it again. But when price was coming down, price can tap on our flip zone now with this signal and give us our buy. But we are supposed to be expecting price to come to what? To come to number 1 zone. So, but price did not get to number 1 zone. Price just use number 2 zone to continue buying. Then in some scenario also, after price has, comply with this signal number 2, you see that price will also be coming down. Try to comply with signal number 1. In this situation, if maybe we have set our trade here before, since trade 2 has now been activated and the signal is activated, when price is coming back to this first signal now, we will cancel the signal we have there and wait for what? For our confirmation entry, whereby if there is a demand zone here, we want price to also tap on the demand zone, give us our second entry, like another demand. That's morning star candlestick pattern, all those things. That is going to give us a new confidence to do what? To enter the trade. Because there are sometimes, since signal number 2 has been activated, we'll say that this signal number 1, price will just come into it and deactivate it. It will not, this signal number 1 will no longer hold. All right. Then the other part is also, if series of pullback has happened away from the entry signal, always make double confirmation before entering trade again. This is what I'm saying. Series of pullback. This is the first one. This is our signal. Number 1 signal was not activated. It went up again. Number 2 signal not activated. It went up again. Maybe we'll now have another pullback. Then price is coming back. If price is coming back, this signal number 2, we have to look for double confirmation. Signal number 1, we have to look for double confirmation, because price has gone too far ahead. Because in trading, we have to use common logic. Trading is an on-the-job experience. It's just like driving. Somebody that is learning how to drive. As you are driving, you'll be taught how to drive, all those things, but you meet a lot of things on the road. Different type of people driving, different experience. You cannot be taught everything, but you already know what to do. Then you have to use your initiative and like common logic to be able to apply those information you already learned and apply it on the job. That is what trade is all about. Let's look at some example why it is good to follow some rules of this trading to trade and have high probability. of winning your trade. Okay, let's look at this example. You see what price is doing here? Price is making series of pullback, pullback, impulsive move, pullback, impulsive move, pullback, impulsive move, another pullback. Then see what price did there? Price came into, price gave us this signal here. This one was not even tapped. This demand zone was not tapped. Then when price came back, this is supply zone. You can see morning star candlestick pattern. Then price came into the supply zone, tap on it. Okay, when price has tapped on it, you see it has now given us another confirmation to trade, which is this entry signal here, and that's our another morning star candlestick pattern. Then what do we expect? You see what is happening here. This is an uptrend trade, but in a counter trend, price has given us a support level there. Okay, so what I'm trying to say in that previous example I mentioned was that as price has given us a support here, this support should have been tapped immediately this signal is given, and probably you can sell it down to this demand zone, because this is a counter trend sell. All right, but in this situation, this signal was not tapped. When it was given, this supply was not tapped. It just came downward, tap on our main demand. And remember, price is what? Bullish. When it tap on our main demand, it has given us our confirmation entry. So therefore, we are going to place our trade here to buy this market, put the stop loss and target our 1 to 3 risk to reward. Okay, that is how we trade. And then if price even invalidates, if our entry invalidates this particular supply zone, it doesn't matter, because we are in uptrend, so we have to trade with the trend. But if you are not so convinced with this trade, you can also leave it, and look for more better entry. Okay, this is another example. You can see, let me try to zoom in there and see what price is doing. Price was making series of pullback. This is impulsive move. Another one. Price came, another one. Then this situation, this is our supply. Our resistance has turned to supply now. Price is making series of pullback, series of pullback. By the time we now look to our left hand side, there is a demand zone here. Okay, you can see it, a valid demand zone here. But why don't we enter this trade directly and put our buy signal here? Is because there has been a series of pullback happening within this range. You can see it before price finally came to tap on it. Then the second confirmation is now when price tap on this demand zone. You can see what price has given us here. Price has given us our morning star candlestick pattern to do what? To buy. Then we can now set our buy signal there. When it is price to come down into this signal and buy accordingly with our double confirmation entry. Okay, this is another example. You can see what price is doing here. Price was making bullish movement, which is impulsive retracement, impulsive little pullback, that's retracement there, impulsive retracement, impulsive. Then price was not making this minor pullback, minor pullback. Why price was making those minor pullback? You can see this is where we have a demand zone there that was not tapped. A signal there was not tapped. You can see it very well. Let me zoom in. You see it. This signal zone was not tapped. So, and this was a flip, like resistance now turning to what? To support, in our flip model, pullback, price take the resistance, turn it to support, then give us our morning star candlestick pattern of entry. But you can see the signal was not tapped. But you see what happened here? When price has already made series of pullback and gone so far ahead, then price is trying to come down. So if you do not cancel this trade and you see your trade is still activated, you see what happened here? Price just came and drive through it. It did not even stop. It just drive through it. You would have lost this signal. But if you have waited and cancel this trade, and then you cancel it and extend your entry point there, then you wait for the trade to give us what? Our entry model, where price will not tap into this zone, give us our morning star candlestick pattern, then we cannot enter using this new structure, this new candlestick pattern. This would have been a better trade. But now, since we will not see it, this trade, although it failed we will not be in that trade to make any of those loss that would have happened. Okay, that is why double confirmation is very good, especially when price has gone ahead. So far, I'm also seeing the signal there. You see, even when price also came to this particular signal, you see what price did there in the 21 moving average. This signal was not also tapped. So when price also came back to it, there's no entry there. Price is not give us our morning evening star candlestick pattern. No signal there. We have to leave it, then let price do its thing. Okay, there was one particular information I want to pass across. I forgot to add it on that explanation. When you have a situation whereby price is making this type of pullback, and then this is minor pullback, price has already given us our signal here. Then during the process, when price tap into the signal zone, price also give us another signal, and price has now provided us our entry confirmation whereby the signal is now complete. Like this, I want to risk, 1 to 3 risk to reward. You see it. This was the signal. This is a moving average signal. You can see it where we have a evening star candlestick pattern. Then price came into it, tap on it. Price has now done what? Make this trade, and this is now complete 1 to 3. Okay, now what you should note here is why price tap into this particular signal. Price also did what? Tap into the second signal, which is also on the same 21 moving average. You can see it crossing it. Price also cross it and give us this signal. Okay, we were supposed to enter this signal immediately before price gets to this our target, our first target. So when you are entering trade, maybe you miss out on this first signal, then you saw the second signal, you want to enter it. When you are entering the signal, make sure that this signal is activated before the first signal target will be activated, because once the first signal target is achieved, this is your second signal that you are now entering, the probability of winning it is very, very low. All right, so that is all for the trade management and understanding how to trade it and use our common logic with double confirmation and a lot of those things. As I said, that trading is an on-the-job experience that you're going to get more experience, and when you get used to it, your probability of being profitable will be very, very high. Have a great time.